Hello, everybody. Welcome to Tuesday. The S&P 500 was up 0.7% today, really a result of a very good inflation reading from the CPI report. The overall inflation was 7.1%, which was less than expected. The monthly inflation from last month was at 0.1%, which is the lowest we've had for the year. That was lower than expected. Core inflation was lower the month over month and the year over year. So kind of a 4 out of 4 on that report. Obviously, the inflation is still high at 7.1%. But like I talked about yesterday, rents make up 40% of core inflation. The current rents are much lower than the rents that are being reported in CPI now. So the projection would be theoretically that the CPI can keep coming down. And as I mentioned before, also, I think inflation is becoming less of a story for the stock market as a whole, and the recession that might come from these rate increases is going to be more important. The Fed meets tomorrow, will tell us how much they're going to raise rates. One of the fears for the market would be that they over-raise rates or keep them up too long, creating this particular recession, or at least one that is, more steep than shallow. And so you look at what happened today, the 2-year Treasury yield dropped. That's good for stocks. The dollar dropped against a basket of currencies. That's good for stocks here. And really, both of these are also good for bonds. And actually, a recessionary environment, of course, especially if it's a bad one, could be bad for stocks. But a recessionary environment generally is not bad for bonds because the interest rates are either held where they are and they stop the increases to let the economy recover, or they're actually end up lowering rates, which helps the value of bonds. So we went ahead and moved money back in from the T-bills and ultra short-term bonds into the total bond market index that we use, and the total international bond indexes that we use also. And so hopefully that continues its trend, which looks good so far. So good day. I think tomorrow will be very interesting to see what happens with the, report from the Federal Reserve and the question and answer period. But we did see some interesting things today. First of all, the market opened up a lot more than it ended up at. It hit 4,100 on the S&P 500. Which it also hit exactly 4,100 on the high. It hit exactly 4,100 on the high December 1st. So there seems to be some selling there. It hits that point, it starts to come down. But we also saw some pretty good support at 4,000 today on the S&P 500. So that's good. So we broke through that. Hopefully we can stay above that and just continue to go. So we'll see how this plays out. I think, tomorrow will be interesting to see how the market responds to what's happening. The last time that the Chairman Powell spoke with the Brooking Institute just a couple of weeks ago, market went up 3%. A big piece of the reason it went up is I think because if you listen closely to the wordings, they weren't as harsh. And I think the market is responding to the fact that the Federal Reserve seems to feel like inflation is getting more under control, and the Federal Reserve is going to allow the market to gain some potentially. We'll see what happens tomorrow and how much they try to scare the market and how much the market responds to that. But that's going to be the big step that we're coming up next. Once we get past that, we'll start talking about, what's going to be maybe happening here at the end of the year and early next year. So look forward to talking to you tomorrow. Thank you very much.